Hello traders, the title of the video is how to trade the head and shoulder chart pattern like a pro. Or you start saying to me, George, I already know about that. There's nothing new that you can teach me here. Whether you are an experienced trader or a new technical trader, I invite you to watch the full length of this tutorial. I will try to keep the video very short, alright? Something that you want to know, all right? So how do you trade the inverted head and shoulder chart pattern, all right? So when you are trading the inverted head and shoulder chart pattern, we have this is the head here, this is the left hand side shoulder, this is the right hand side shoulder. If you want to learn more about the head and shoulder chart pattern, you need to go to www.stochastic-market.com and check the web page relating to the head and shoulder chart pattern. Now, the head and shoulder chart pattern is formed at the end of an uptrend. So you want to know the place and the time when the pattern is completed. So check out that web page to understand everything clearly. So in this tutorial, we're just going to talk about how do we trade it. Okay, you want to draw use pitchfork tool. For traders that are very new to the pitchfork tool, go to www.dayprotrader.com, learn about the pitchfork tool. You connect this high, okay, to the low here, and also to this high here, the second, in fact, the third top here, this one. 1, 2, 3. So it's the head, left hand side shoulder, right hand side shoulder. So you want to concentrate on the head and the right hand side shoulder. That pitchfork tool is so important. You determine the possible path that the price will take, because as you can see here, people want to sell it. You can see that it's escaping the bearish path. The bearish path, the pitchfork tool, which means though people are expecting it to go down, it's not going down as they were expecting it. It's escaping that pitchfork tool. So draw the pitchfork tool. You see here, straight cable, and finally support going back up. Sometimes the price may form multiple right hand side shoulder, sometimes even multiple left hand side shoulder. You may come back here from another top before coming down, blah blah blah. But as I told trader before, the head and shoulder chart pattern will become territory bearish if the price break below the neckline. The neckline is the point where the price changes direction before forming the right hand side shoulder. Okay, pull back, let's change the direction here and form the right hand side shoulder. You may say to me, Joyce, how do we know that the right hand side shoulder is completed after the common center line is broken? How do we know that the left hand side shoulder is completed? That's the high before the last high. We want to keep the video short, yes or no? Alright? Another pitchfork tool that you must place on your chart that can be very useful to you if you are trading the head and shoulder chart pattern is also, you remember the first pitchfork tool is between the top, this high, alright, the head and the right hand side shoulder. Now this time we'll concentrate only on the left hand side shoulder using the low before the left hand side shoulder. So we are connected 1, 2, 3. 3 points we need to draw the pitchfork tool. So you want to draw those pitchfork tools on your chart because they are very, very important. So price is going now. Before we see the right hand side shoulder, the price will escape that green pitchfork tool, telling us that all right, the bullish sentiment is diminishing, forming a lower high after a higher high. This is the indication to us that okay, the sentiment is becoming a little bit bearish. You want to draw this trend line connecting the top and the right hand side shoulder. That trend line is too important to miss. Are you getting now? So first pitchfork tool connecting the high, the top, and the right hand side shoulder. That's the red one there. Second pitchfork tool, concentrate on the left hand side shoulder and connect it to the low before, okay, the left hand side shoulder. That's the green one there. But the green one will indicate to you that the bullish momentum is diminishing Now this trend line is so important. You see now what's happening here? Now because the red pitchfork tool is telling us if the price, if that pattern should be profitable for those that are trying to sell it, they should remember that you must find a resistance below the neckline. It didn't go below the neckline yet, yes or no? They are rushing a bit. Understand? They understand. Okay, if I find support, now it's pulling back. He's in here. He was pulling back. Anytime the price is pulling back, don't look away. Understand that the price is looking for support level. There was one here. Can you see? It's support here. So sometimes people concentrate too much on the pattern and they forget everything else. So because they are thinking of head and shoulder, they forget about that the price can find a support here. And it did this time. It didn't come all the way to the neckline. And sometimes people will sell anywhere anyhow, only to be kicked out as it is now. But now, because people say, oh, I was expecting. So right now, a lot of traders will say, oh, I was expecting that you will form a head and shoulder chart pattern. What's going on? Those chart patterns are not working. Nothing, it's not about working, it's about the price, flowing with the price. So now you see, that's where. So that blue trend line is helping us to understand why that candlestick bar got a shadow. But be careful, that candlestick bar is not yet closed because it's the month of February 2019. Today is the 17th of February 2019. So, you see, I'm recording this video on the 17th of January. Okay, the time is, 9:45 p.m. It's not closed yet. But right now it's looking bearish. If you want to investigate more, you go today, you see. You're now on the weekly chart. So because that candlestick bar is not closed yet, you see, week before last week. Okay, you see here? That shadow, because of that trend. If you didn't draw it, will you know that there's a resistance there? There is a resistance. In fact, there is a hot spot trading zone right there on the weekly chart. Before I forget, let me go back to my favorite time frame monthly chart, okay? You get it? So those are just few things you need to do before. But you want to trade, okay, head and shoulder chart pattern. What are you looking for? You are looking for bearish trading setup. Have you seen one? If you see one, what's the next step? You must use a different time frame trading method. All right? So a simple way to know that a bearish scenario is likely to take place, the common trend line is broken after a bullish move up here into a resistance zone. So this was a resistance here. So I brought it to the resistance zone. Common trend line is broken. So this is telling me that there is a resistance here. Which one? This one. Now implement a top-down trade method to trade. Price going down, it's looking for a support level. So exit strategy first and here support level. You don't want to ignore it. Now you see the common trend line again here also is broken. And the price is escaping our pitchfork tool. Alright? Which moving average is this? It's a moving average 50. Now traders that are TSCW24 traders know that we use a moving average 50 with another moving average, and that also help us to trade the head and shoulder chart pattern better than other traders out there. That's an indication. TSTW24 traders, check your PDF please. Moving average 50 and 1. Okay, don't put in the comment section though. You don't want to do that, okay? So right now, what can we say to traders? Well, I can't say that now on the monthly chart because that candlestick bar is not yet closed. I will have to drop down to the weekly chart. So on the weekly chart, see, because today is Sunday, we are looking bearish now. So I will say to those that are in a hurry that prior to bearish signal below that blue trend line, prior to bullish signal above it. So beginning of this week, you want to be careful because the price pulled back on the weekly chart to retest the moving average 100. But if you are using a weekly chart, be careful. I prefer the monthly chart. You may see all kind of setup on a weekly chart, but they may not be solid than the one on the monthly chart. Going back again quickly to my monthly chart, I'm approaching my time. So you want to draw what? Apart from those three things we done, the green pitchfork tool, the red pitchfork tool, and that trend line. You measure the depth from the top of the top, okay, of the head, or the top of the head, down to the neckline, okay? You project it below. You want to do that straight away. That's the ultimate target at $42.67. The midpoint target, you divide this measure stick into 2, is 70. Just leave it there. It may not come there, it may not even reach it. But if you start going down, break below the neckline, and then find a resistance, common settings are broken after a rally, and you are taking it using a top-down trading method. Remember the support level, all right? And most importantly, don't forget the midpoint target and also the ultimate target. A lot of traders out there know about the head and shoulder chart pattern, but they don't use it in conjunction with the price target level. It's a mistake. Or sometimes people forget about those targets. So they trade it for a while, they make some money and they forget about it, and they remove all the line. They say, all right, I don't need it anymore. But you need it. Or you need those lines, leave them there. Why do we keep them there? Because we'll be looking for trading opportunity on here, those lines. Like I said before, anytime you're using any horizontal key level, use them in conjunction with what? Moving averages. Did I say moving averages? Are you saying that you hate moving averages? I feel sorry for you, okay? Now, okay, this is to make you laugh a bit, all right? Intersection of moving averages and key level, a hot spot reason. This is a hot spot reason of moving a 50 and that key line there, all right? Trend lines, intersection between trend lines and horizontal key level are what? Hot spot reason. So after everything that I've said, that I've been shouting about so far, you see that trend line? You see that trend line? Put it on your chart. Yeah, you see. Now you understand, you see? See here? Come to the edge of that one we just draw down. That's how you want to trade your. So what is happening? People just want to sell, they just want to sell. And they are not looking for trading setup around the edge of the trend line at a hot spot trading zone. And sometimes the price sometimes it may even form a triple right hand side shoulder, triple top here, blah blah blah. So what's going on? But it's just bouncing up and down and down, and then finally before it will come down, or it may not even come down. It will just, like now it can just break above that blue line here, retest it, find the support and go up. That's it. All right. So you want to draw all the lines that can be useful to you. All right. All the lines that can be useful to you, and then just look for trading setup on here, one of those key level. And if you see one, just implement a top-down trading method. Though I'm using the monthly chart, you can apply the same strategy on a daily chart, but it's more solid on a monthly chart. I'll say 100 times. Look at the daily chart, how the price came into the zone of that trend line. You see, the bearish trend line, find the resistance, find the resistance, find the resistance, find the resistance. Use monthly chart, okay, key level. Check out that video that I posted at 2 Stock Trader, very important video. Share with everybody, all right? It's 4 reasons why I recommend the monthly chart. All right, check it out at 2 Stock Trader. All right, so that's it. All right, this is about, all right, how to trade the head and shoulder chart pattern like a pro. Was he like a pro? Anytime I use the word like a pro, I'm meaning that use different type of trading method. All right. So first thing, draw that pitchfork tool. Draw the second pitchfork tool. Remember to draw this very, very important trend line, and then use the price target, set it up. I can go on and on talking about market geometry, but I'll stop now. I think I've said enough. If you think this video has been useful to you, please let us know by giving us your beautiful thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I really appreciate it when traders share our video. And I say to those traders, thank you very much. Sometime I'm posting video first on Facebook. My Facebook page is stochastic-MACD. Sometime I'm on YouTube first, YouTube channel 24 Stock Trader. Digit 2, digit 4 Stock Trader. Subscribe today. And be sure to click on the notification bell. So anytime we record a new video, you will be the first person to be notified. If you want to learn more about head and shoulder chart pattern trading or other chart pattern trading, go to www.stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade, okay, head and shoulder chart pattern like a pro. Happy trading to you all, and I will speak to you soon. Thank you for watching.